Proud supporters of Africa this week. Engine, with us, you are number one.
Welcome back to Africa This Week. Nigeria's President Goodluck Jonathan recently unveiled a new import policy being pursued by the federal government that would favor manufacturers. Isile Igbe from Corporate and Investment Banking Research at Stanbic Bank discussed the president's new economic management team's growth policies.
Yeah, what the import policy seeks to do is to get the large-scale manufacturers of certain goods and commodities, to import some of these products, in excess of, where you have a deficit in the production, in local production. So what it's basically doing is to make the importation of those products exclusive to local producers with scale.
A big issue for Nigeria is diversifying the economy, but also boosting its industrial capacity. One of the sad, issues around Africa is regression when it comes to industrialization. When they're focusing on local manufacturers, is it going to bridge this gap?
And of course it will. I think what this does first and foremost is that it encourages, the needed investment in local capacity. Then obviously you're saving some foreign exchange, and then you could go on to creating jobs, and I think to a large degree consolidating the sector.
What about the pervasive issues we know that plague manufacturers in Nigeria? Infrastructure, disruptive electricity, input costs, for instance, and a lot of the imports that they also have to incur in those inputs, and the volatility of the exchange rate in these circumstances?
I think it's likely that those will remain, they will remain challenges, but I think we should bear in mind that the key focus for the current administration is power. Power remains a key frustration for a lot of the local producers of goods and services. So I think if they're able to sort of improve the production of power and its reliability, that would obviously go a long way to ease some of the challenges that the local manufacturing companies have. But like you said, there are still other challenges. But since this is sort of the focus of the government for now, I think probably in the medium term we'll probably see a resolution to that and then move to solve other problems. The distribution channel are quite weak. We have very bad roads, and like you said, the imports, the cost of importing some of these commodities, and so many others, like also human resources. I think those will basically solve themselves, along the line. But I think those are more long-term. Those will probably see more long-term solutions. So I think power will be sort of the immediate area that the government will look to tackle.
Within the import policy, there's huge emphasis on food security and domestic supply, targeted areas, rice production and sugar. Why is that? I
think a lot of that discussion, or the statement that the president made, came off from a discussion he had with a local food producer, flour mills, who already produces or sort of imports and bags rice, and they'll also look to produce sugar. So I guess if I put in context what's going on in the sugar industry, you have a situation where there's a lot of interest in local production. You have Dangote sugar, you have Boa sugar, and flour mills also looking to build capacity around about 750 million tons. 750,000 tons. But the challenge there is that there is still a large importation of raw sugar into Nigeria, and also refined sugar for industrial use. So what the producers of refined sugar would like to do is to persuade the government to reduce the importation of refined and raw sugar, so that they can boost output and obviously realize the value that they intended to from those investments. So I think the same will also apply to rice as well. You have flour mills with some capacity in cultivating rice and other products like soya beans, and so I expect them to backward integrate, which is basically the thrust of flour mills policy strategy going forward, and we can expect them to probably start producing rice, package that, and put it out in the market.
Are we
basically, get into the food security that you mentioned earlier.
Are we going to see more local producers coming to the fore? This import program follows hot on the heels of a discussion that the new Minister of Trade and Investment had with local producers. Already ₦1 trillion being committed to breweries, for instance, bottling plants, to the agri economy, and also to petrochemicals.
I don't expect that to happen just immediately. I think it's something that'll take, some time. I mean, we've seen the agricultural fund, as a big example, the agricultural credit fund, and we've seen how that has sort of taken time to get disbursed, get out to farmers, and actually see the impact on the economy. So I expect the same thing as well with this new fund. You obviously have to select credible and, I'd say, quite credible producers or, investors who are looking to stay in the sector for long term. And I think that is basically how you see this translate into something positive. But I think very key is obviously not just having the policy, but also implementing the policy effectively. I mean, for some of these products, there is already some level of a limitation on imports, but the government obviously needs to go to the next level. And I think what really differentiates, the existing policy, what the government is trying to implement now, is that existing producers of the products or commodities will be directly involved in importing them if they have to.
Kenya's Capital Markets Authority has entered into a partnership with Securities and Exchange Commission of Ghana. The two authorities hope the move is a signal towards sound financial services in their respective countries. Adu Anane Antwi, Director General of the Securities and Exchange Commission of Ghana.
We have this partnership with our counterparts in Kenya, the Capital Markets Authority, and we've signed an MOU, that is Memorandum of Understanding, to ensure that we could exchange information relating to how we regulate our various capital markets. We exchange information so that we can have rules, laws, and regulations, how to administer all those rules. We need to exchange information on how to do that. We also need to collaborate even in terms of product development. If Kenya develops a product and we think that we can study from them, learn from them, and come out with similar products, it should be possible for us to do that. Likewise, they can also do that when Ghana has come out with some products. For example, if we have now we've gone a little step further in introducing exchange-traded funds. If Kenya is now going to do that, they could learn from our experiences what we did, and if there were any problems that we face, they would be able to avoid those problems. We also cooperate so that in case of anybody flouting the securities laws in any of these countries, and there's a need for one other country to provide assistance to the other in terms of investigating what somebody has done in that country which affects the market of the other country, it should be possible for the other regulator to seek your assistance, for you to do some investigation in your local market, right, and give that information to the foreign regulator to be able to pursue its regulatory enforcement policies.
Okay,
so
now some people would argue that Kenya is a fairly well-regulated stock exchange and capital market in general. Even in the process of demutualization, there's been just such rigor and such diverse consultation in how the process is to be undertaken with the stockbrokers, with the public, and all the mechanisms. Yeah. For many people, the issue in Kenya is how to lift the market. For many people, the issue in Ghana is how to lift greater domestic participation in the market. That is generally what investors are concerned about. It's not the governance, it's the dynamism.
Yeah, we are all concerned about developing the capital markets, the stock exchange for that matter. And we need more listings on the stock exchange. Kenya has more companies listed on the exchange than Ghana. Ghana started with 11 and we have moved now to 34. It's still not what we want, and we together, if we collaborate and share ideas as to how to move, get more listings. We learned, since I have been here, I have learned a few things about how to get things done properly. They've also learned a few things about what we are doing. The sharing of these ideas gives you the opportunity to do more in developing the products, making sure you can get more listings on your exchange.
In Incorporating environmental and social risk analysis in overall risk management, a conference on Nigeria's sustainability finance got underway in Lagos this week. Wale Famurewa spoke to Ruth Brewer.
If we discuss sustainable finance, we discuss a world that is going to be growing from 7 to 9 billion people in the next 30 years, and the fact that we need to give everybody the right or the option on a decent life, which means food, shelter. So that means we need to do more with less, and we have to be more efficient. And at the same time, we have to realize these 2 billion extra people are 2 billion additional consumers. So there's also a lot of potential for business growth in it.
So in that context, we talk about the community, ecology, economic prosperity of where you live. Give us a sense of how banks can get involved in this. Obviously, there's this Sustainable Finance Week in Nigeria. Give us a sense of how banks, the role that banks have to play in promoting a world with sustainable finance as a focus.
Yeah, I think that's a very good question. It has 3 aspects. First of all, it's just simply the ethical aspect. I mean, being a banker is a privilege. I mean, people give their money to you, they don't even know you, and you're allowed to take care of their money, which means that if you on-lend it, if you invest it, you have to do it in such a way that you do not harm the world, the environment where the people live in that gave the money to you. Secondly, we see companies, global companies, but also local SMEs, they're changing rapidly. For example, a company like Unilever has said palm oil from 2050 onwards, 100% of the palm oil resource must come from sustainable level. So if you as a banker finance, for example, an agriculture project that is not sustainable, you will lose the client because it cannot export anymore. And this trend you see all over the world.
That's all for this edition of Africa This Week. Join us again next week for another roundup of the top stories in Africa. From me, Mashudu Masuta, goodbye.